Hi, today I'd like to talk to you about business expenses, personal versus corporate. One thing to note that there's a reasonability factor that CRA will look at. Is the business expense reasonable? How to kind of look at this is, let's say it's a lunch expense and you're a salesperson. It is reasonable to expense 50% of a $100 lunch versus 50% of an $800 lunch, which wouldn't be reasonable for two people. Another way to look at it is if you were a plumber and you try to do lunch expenses, it wouldn't be reasonable. But what would be reasonable is to expense working supplies and materials. Also remember that for 7 years, you need to keep all receipts, whether digitized or in paper format. CRA will definitely disallow expenses that don't have backup. In HST audits, they actually are looking for the HST amount on the receipt to prove that you actually expensed it. Again, if you don't have the receipt, it'll more than likely be disallowed. Being organized, doing tax planning is the way to attack this situation. What I like to do with our clients is organize things into after-tax expenses in terms of payroll. Like if your partner or spouse had after-tax income, you would definitely want to use things that are non-business related to pay with that money. And if it was business related, you would like to move those expenses into the business's name, i.e. a cell phone plan that is owned by the business, internet plans that are owned by the business. These expenses then can run through the business and treated as business expenses. Any personal amounts that you benefit from obviously have to be taxed. Definitely call us for tax planning. I think that once we get you organized, get it set up, you definitely can benefit from using, after-tax money, like money that's been payroll tax versus in the business, to be efficient, to be organized, and to minimize your tax burdens. There are definitely a lot of things to look at in terms of the expenses because, again, it's reasonability, will CRA allow it, and the planning. Once it's owned in the business name, it should actually become a rinse and repeat process where the business pays for it out of the business's money and you never mix business and personal. Another good example is a car. Mileage definitely is something that you would use if the car was not owned in the business. The advantages are obviously it's a blanket per kilometer expense, which would include like gas, insurance, maintenance. So you would not be able to expense these, you would just be using the mileage. On the flip side, a car under $30,000, which is the maximum depreciable amount, would be owned in the business, which obviously then you can depreciate the car, use gas. Any personal use would obviously then be pushed back to you as a personal income. So again, it all comes down to your business, your needs, and definitely call us today, 416-697-6478. Again, 416-697-6478 or info@bbsaccounting.ca or info@torontotaxexperts.ca. Let us help you get on the right path, get organized, get things in an accounting software, and maximize your expenses to minimize your tax burden to CRA.